Hey everyone, in this video I'm going to give you a brief introduction to the statement of cash flows. So let me get my picture out of the way. And here you see a complete set of financial statements. We have the balance sheet here, in this case at the end of year 7, and then we have another balance sheet over here at the end of year 8. Remember, the balance sheet tells us, another name for the balance sheet is the statement of financial position. It tells us here's the position of the company at the end of year 7, and here's the position of the company at the end of year 8. In between that, we have the entirety of year 8. And during year 8, we're going to have some financial statements that summarize what happened during that period of time. We've already talked about the statement of income, the income statement. And on the income statement, we have revenues minus expenses, and that gives us our net income. Well, the revenues, remember, reflect the work that we did for customers. And so, remember that the income statement is prepared using the accrual system of accounting. Under the accrual system, revenues are recorded when we do the work, and expenses are matched against those revenues to reflect resources that were consumed during that period of time. So neither of those are they involve cash, but they're not directly reflecting how much cash was paid or how much cash was received. That's what we're going to do with the statement of cash flows. So just to complete what we've already done, the income statement gives us our net income, and that goes over to the statement of retained earnings, is added to the beginning retained earnings. We subtract our dividends, if we have any, and that gives us our ending retained earnings, which then appears on the balance sheet. Well, at the same time that we've got this income going on, and again, that what we just now talked about, the statement of income and the statement of retained earnings, that helps us, it explains how we got from the retained earnings at the beginning of the year to the retained earnings at the end of the year. Well, at the same time that's going on, we also are collecting and paying a lot of cash. And so that's where the statement of cash flows comes in. It simply summarizes the cash collections and the cash payments throughout the period. Now we're going to group those payments and collections in 3 categories: operating activities, investing activities, and financing activities. So the operating activities are cash collections and cash payments related to day-to-day operations, buying and selling our product, paying our employees, collecting money from customers, day-to-day operations involving the core of our business, serving customers and paying for expenses as we go. Investing activities has to do with buying and selling long-term assets, things like land, equipment, buildings, furniture, but also long-term investments, where we are just keeping excess funds that we have. So buying and selling long-term investments would go under investing activities. And then on the other side of the balance sheet, the right-hand side of the balance sheet, or in this case, the lower side, we also have financing. Like we might borrow money long-term and pay it back. We might issue stock, and so we get money from stockholders. We might pay them dividends. So we would call those financing activities. So for the statement of cash flows, what we're going to do is we're going to simply classify all the cash coming in and going out into one of these 3 categories, just to summarize what's happened throughout the period. Okay, so let me give you a little better example of that. Here I have a cash account, and we've got a beginning balance of $15,000. And during the year, we've got some debits to cash that represents the collections that we've had. And we've also got some credits to cash, which represents the payments. And what we're going to do is we're just going to basically grab all those different debits and credits, pluses and minuses to cash, classify them, and put them together in a statement of cash flows. So for example, here we have these items A in the pink represent collections from customers. And if we were to add those up, it gives us a total collections from customers of $60,700. We also had some payments for various expenses, like here we had $20,000 for rent and $21,000 for wages. So our total payments for operating expenses was $41,000. So under operating activities, we had collections from customers and we had payments for different types of expenses. So the total cash, the net cash provided from operating activities is $19,700. Next, we're going to pick up the investing activities. And so looks like we collected $70,000 cash from selling some land, but then we also used $95,000 to purchase some equipment. So we had cash coming in and cash going out related to investing activities. And then under the financing category, we issued some stock. We got $50,000 from that. That's this debit to cash up here. We also made some dividend payments to our stockholders, and that's the credit to cash. So that netted out to $35,000 provided from financing activities. Well, if you add these three subtotals, the cash that came from operations, the cash that was used up in investing activities, and the cash that was provided from financing activities, the net cash, we had an increase of $29,700, adding that to the beginning cash, and we had an ending cash balance of $44,700. So kind of going back over here, I was just summarizing those subtotals to show how the statement of cash flows explains how we got from the beginning cash to the ending cash. The beginning cash was on last year's balance sheet, and now the ending cash is on the balance sheet at the end of the current year. So the statement of cash flows tells us, it summarizes the cash collected and the cash paid throughout the period, summarized within these three categories. Contrast that with the income statement. The income statement focuses on revenues that we earned by doing work and the expenses that were incurred while doing that. And so again, the income statement focuses on the work that we did. Statement of cash flows focuses on the cash flows, the cash collected and cash payments. So these two statements are really just two sides of what I'm going to call the financial statement coin. So again, the income statement focuses on the work we did. The statement of cash flows helps us to understand the cash collected and the cash paid. So that's the statement of cash flows, and it's just another important component of a set of financial statements.